Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to do an update of the current breadth readings on the market. Okay, lots of ways to analyze the market. You can look at the indexes, which give you, what's going on the surface, but they're not always accurate because of the math that's used in order to calculate them. You look at the breadth, that's a way of looking underneath the surface to see what the participation is. So sometimes you can have the S&P 500 doing one thing on the surface, but you look beneath the surface and you realize that actually a lot of stocks are not actually doing the same thing. So in this video, I'm going to do check out the market's breadth. I'm going to look at the advanced decline line. I'm going to look at stocks that are above certain key moving averages. I'm going to look at stocks printing 1 month, 3 month, and 52-week high lows to get an idea of what's going on beneath the surface. All right, let's get into it. All right, so here is the S&P 500 up top, and down below is the 5-day moving average of the NYSE AD line. Okay, and as you can see, we currently have the lowest print of the last year. Okay, drops below zero are fairly normal. You can see drop here, drop here, drop here. That's fairly normal. Nothing to be really worried about. Deeper drops are a bigger issue. Okay, but the biggest issue is failure to recover when you get a deeper drop. So this is the absolute deepest drop we've gotten in a long time. So from here, we're going to see if this struggles, if it stays down here, if it moves up and then gets rejected, the market's in trouble. Okay, we might get a repeat of something like this. Okay, but if it can rebound and get above zero and stay there, then the market should be in good shape. Okay, so the depth of this is definitely a huge concern. It's the worst plunge we've had in the last year. And now we will judge the market based on how fast and to what degree it recovers. If it recovers, the market will be fine. If it doesn't recover, market's going to be in trouble for a little while. All right, here is the same chart backed up a couple years. I've posted this on Twitter a few times. And it's really important to point out. So over here on the left side of the chart, in 2002, the market was weak. It was trending down, like lower highs, lower lows, stair-stepping down. There were some bounces along the way, but for the most part, it was trending down overall. And you could see that a characteristic of this is you have many deep plunges here into the bottom rectangle I drew. Okay, that's pretty obvious. Now, right side of the chart, you can see market mostly moving up. Okay, there are drops, there are little corrections, there are little pullbacks, all that stuff. But for the most part, the market is trending up. And what you see is there's almost no drops here. Okay, there was one drop over here back in March of 2023, right at the bottom there. And otherwise, there were no deep drops. Okay, so a characteristic, okay, I sometimes will work backwards, is that if you're getting deep drops like we got here, that means the market's in a downtrend. If we're completely void of deep drops, that means the market's in an uptrend. So the fact that we got a drop over here, let me delete all this stuff so it shows better. The fact that we got a deep drop over here is a little bit of a concern. Now, if we bounce back like we did over here, we got a deep drop here and then it recovered. If it stays up, then the market will be fine. But if we have repeated drops, if this bounces and then we get another drop, and if it bounces and we get another drop, if we get repeated drops down here into this bottom rectangle, then we have no choice but to say or admit that something has changed and the market is now trending down and we have to act accordingly. Okay, it's the number, or maybe not the exact number, but whether we get a lot of downside plunges will tell us what kind of market we're dealing with right now. So this is a warning right now. All right, next chart is this is the 10 moving average and the 20 moving average of the NYSE AD line. I'm just showing it just to kind of show that what has happened. The market is, the AD line has over here was positive, here was mostly positive. There was one drop over here in January, and now we just got the deepest plunge since all the way back, when the market bottomed in late October. Same thing with the 20 moving average. All the prints here are above zero. We just broke down to the lowest level since early November. Okay, oversold is going to be somewhere. Let's get rid of that. Oversold is going to be somewhere down in here. We're not there yet. Oversold here is going to be somewhere down in here. Minus 400, minus 500. We're not there yet either. Okay, so we have the deepest plunges, but not oversold. This is a major warning. Probably not going down yet. We'll have to gauge, we'll have to gauge how things go from here. But as of now, this is the worst drop we've had, since the August, September, October sell-off. Worse than what took place at the beginning of the year, worse than any other time. So we need, something's changed. The character of the market has changed, and we need to pay attention. We can't just put our head down and keep plowing forward without noting the change. Okay, so things have changed, but they're not so bad that we can actually start looking for like a bottom. Okay, we can get a tradable bottom, but we're not going to get the bottom yet, probably. All right, so here's the SP 500 versus the NYSE 80 line. This is the cumulative line. Okay, you can see trending up with the 21-day moving average. Minor drops below the 21-day moving average are perfectly fine as long as it recovers relatively soon after. So as an example, if I come back over here, okay, we got a drop below the 21 here, and then we tried to get above it, and it got rejected and bounced, and what happened is we got a second leg down here. Okay, it dropped below the 21 here, tried to bounce, and then did a second leg down, and we got a second leg down over here. You come over here, we got to move below, it moved up, got rejected, and then leg down again, and that led to more selling over here. And it goes on and on. So, over here, we got to move down, but then it got above, stayed above, tested it, and went on, and the market continued up. Okay, so right now we got a big move down. If this thing bounces and gets rejected by the 21, the 21's going to kind of come in like this. If it gets rejected by the 21 and goes down, we're going to get a lot more selling, or at least a second leg down over here. So that's what the bulls and the bears are going to be looking for. The bulls want this thing to reclaim the 21 over here, and the bears are thinking if it gets rejected by the 21, we're going south again. All right, now this is the Russell 3000 stocks above their 20-day moving average. Okay, very clear support line here at 40. We broke down. We're printing the lowest levels since August, September, October. What I want to point out here is, if I can get the right tool, is just what's the difference between an uptrend and a downtrend. When the market is trending up, you get rotating price, you get rotating prints up and down 40%, 80%, and during this time, the market generally trends up. Then when you get rotating prints up and down at a lower level, the market trends down. Okay, and we got, these weren't really rotating prints, but there's no doubt that they were at a higher level. These prints were at a medium level, but still not bad. Okay, and it supported the uptrend. Now we enter a new lower box here. Okay, so if this print recovers and gets up here, and then we get some up and down movement above 40%, then the market should be fine. Okay, so the question right now is, do we get this? Do we get rotating prints in that kind of a range, or do we get rotating prints in this kind of a range? We'll see. Okay, we can't predict. See what happens. Be objective. Read what happens. Don't guess. Don't hope something happens. But from right here, it's not looking good, and we'll have to see what this recovery is. If it recovers, the market will be fine. If it doesn't recover, if it stays down here in this lower box, market's going to leg down further. Okay. Now we have Russell 3000 stocks above their 50-day moving average. Okay, you don't get the same free-flowing up and down action as you did in the last chart, but you definitely get uptrends and downtrends. So here's a downtrend, and the market trended down. We broke out and went up. Market trended up there. Then we trended down, but then moved sideways. You can see it rotated up and down. There were no high prints over here, which was a little bit of a warning because the market did really well over here. But now, obviously, we've broken down. We're at the lowest level since October. So going forward, if we can recover and get back up here and rotate up and down in a range, that'd be good. But if the market can't do that, if it goes up, if it goes down further, moves up, gets rejected, and continues to do this, and we get some sort of a repeat of this where the market just kind of sticks, where the indicator sticks at a low level, then we're going to get more of this stuff. Okay, so the indicator will tell us how many stocks are participating, and if we get good participation, the market will be fine. But if we don't get good participation, we're going to leg down further. All right, now we got stocks above at a 1 month high low. Okay, similar idea here is that when the market does well, you get decent prints. When the market, and that coincides with this. Whoops, I don't want that. Okay, and then when the market is not doing well, you get these rotating prints at a lower level. Okay, so here we do have high prints. Here we have kind of medium prints. I wouldn't say they're high, but so going forward here, what kind of prints are we going to get? Are we going to get a repeat of this? Or are we going to get a repeat of this? Whichever happens is going to tell us what the market's going to do. Okay, if we get a repeat of this, we'll drop down and then we'll recover and maybe go sideways, and we'll see what happens after that. But if we get a repeat of this over here, we're going to get something at least like this where we leg down further. All right, next chart. This is going to be all stocks 3-month high low. Similar concept, market trending up, decent prints here, market trending down, lower prints there, market trending up. Let me delete that. Market trending up. We got prints in the box up here. So now what happens right here? Do we recover or do we stay down here at a low rate? That'll tell us whether we get a resumption of a trend kind of like this, or if we get a downtrend like that. And here's the 52-week low. I'll just go through it really fast. Same thing, lower prints below zero, downtrend, higher prints, mostly above zero, uptrend. Pretty simple. Don't guess, don't hope, don't read what isn't there. Just see what unfolds in front of you. As of right now, we have prints at a lower level. It's not looking good for the bulls. If the bulls want to rescue this, they're going to have to get this above zero and keep it there. If it stays below zero, then we're going to get more selling. Last chart, this is the S&P 500 up top versus the S&P 1500, which is the 400, 500, and 600 together. Stocks above their 50-day moving averages. So it just gives you an idea how many stocks are above the 50-day moving average. Over here, we had like more than 90% of stocks above their 50-day moving average. Over here, even though the market was up for 3 more months and was a higher rate, and the trend was up, the print was lower. Okay, a little bit of a divergence there. Now we've completely broken down. We're down near 26, 27%. Okay, so we're not oversold like we were here, or here, or here. But that's where we are. So we're down. No doubt, character change has taken place, and things are not looking great, but we're also not necessarily at a level that will produce like a complete hysterical sell-off and bounce. All right. So overall, breadth is not looking good. Advanced decline line, stocks above moving averages, stocks at 1 month, 3 month high lows and such. As I've talked about here, all these indicators have broken down to levels that would be characteristic of a downtrend. Going forward, if they recover, great. If they don't recover, we have more downside coming. All right, hope you got something out of this. We'll see you next time.